Welcome to the B.F. Anderson Technical Report for December the 2nd. Well, Jerome Powell has been reappointed, and I have noticed that the market has had somewhat of a difficulty since this appointment was announced. We can all try to figure out that it's because of the virus or whatever it is, but I was told a long time ago by a mentor of mine that you really want to boil things down to corporate earnings and interest rates. So it's really becoming apparent that Powell is becoming more hawkish, and that's really what's, I believe, kind of causing somewhat of this correction in the market. As we can see here, the NASDAQ pretty much broke down, gave a violation, starting to consolidate. So anyway, the market did not react well to the Powell appointment. Could be that interest rates may be heading higher. Now, on the longer term indicator, which is our trend lines, no problem. Everything is very positive. Now, on the mid caps, you can see here on the mid-sized stocks, pretty much a pretty serious breakdown. You basically had your break here, then you had your violation here, then pretty much a waterfall decline. So the mid caps are having a tough time. Same with the New York Composite. Pretty much a waterfall decline. So this is a time to be cautious. We wouldn't say, go into the storm cellar, but we would say this would be a good time to kind of hold in a little bit and be a little bit less aggressive. Small caps, you can see the same thing, pretty much a waterfall decline. Now on the S&P 500, not as bad. We did get the break and then the violation pretty much down in this area. However, on a long-term basis, like I say, everything is okay. This could be just a buying opportunity. The aggression index, which we compare technology to consumer staples, continues to be in an uptrend, came down, tested that 10-week moving average, bounced off of it, looks positive. On the three economic indicators, as you can see here, interest rates have really dropped off. And this is where it's confusing because with Powell coming in, you would think interest rates would rise, but they've dropped and they broke below the 200-day moving average. You can see here that the price of oil is somewhat plummeting below 70, below the 200-day moving average. Financial stocks are holding up a little bit better, but are continuing to decline. Now, the new lows, not a good sign here. We're seeing a lot of new lows. This is the leaking boat indicator, which means that as the market continues to rally, and you get higher number of new lows, that's just not a positive. And you can see here the S&P has somewhat rolled over here. The inverted yield curve continues to be very constant, no problem there. The sentiment readings, we're getting a little bit, a little too over bearish here, which is good. That's what we want. We've gotten into readings of negative 7.5, negative 10. So it looks like sentiment is somewhat giving a buy signal. Now, on the put-call ratio, continues to be in greed. Like I say, this indicator tends to be a little bit more on the extreme circumstances. Now, on the junk bonds, I wanted to call your attention to this. The junk bonds have really taken a hit here. So what we're doing here on this ratio is we're comparing junk bonds to the no-risk treasury bonds. So when this line moves down, it means that junk bonds are being sold and treasury bonds are being bought. So it's showing somewhat of a risk-averse scenario here. Now, I went ahead and looked at just the indicator itself, the ETF for junk bonds called the JNK. You can see here somewhat of a major breakdown. I think this is somewhat of a warning. Hard to say why this is happening, but people are not buying junk bonds right now, and that's just not a good sign. Now, here's the QQQJ, which is a measure of growth stocks, mainly technology. You can see here somewhat of a breakdown. You kind of had a box here, broke down below the box, continues to look negative. Here's the volatility index, somewhat of a surprise here. Now, on rate of change, we've seen a 53% rise in volatility in the last 10 days. So volatility has picked up. On the oil stocks, I would just tell you to continue to be cautious here. This is the United States Oil Fund, which is a fund that trades on the New York Stock Exchange. pretty much is broken down, broke below the 200-day moving average, just calling it to your attention. This is the top 5. Now, Ambarella came out and announced earnings last night. This is really an interesting company. It's an $8 billion company. They're real big into semiconductors and camera technology, especially for automobiles. You can see here, major breakout, kind of what we would call a gap up. Good earnings, good volume on the breakout, very positive. Here's Enphase, which continues just to kind of somewhat move sideways. This is a company that's involved in battery technology. I would continue to watch this stock. On semiconductor, acting real well, broke out to a new high today. Volume somewhat okay. We would like to see that volume back above 6 million, but looks good. Here's Tesla, as we always want to keep an eye on Tesla. We're not getting much of a volume signature on Tesla. However, the stock has somewhat stabilized, is consolidating. A breakout above 1,200 on heavy volume would be a very, very positive sign. Here is Cloudflare. Now, this is an example of a breakdown. You can see here we got the break, then we got the violation, somewhat of a failed rally, and breaking down again. So Cloudflare, which we did very well in, is one of our big winners this year, continues to look iffy. I would not buy the stock here. I would just keep an eye on it. If you have any questions, please give me a call. Thank you very much.